So let me do a quick introduction. So Laurent Guengant, I'm part of the Hitachi Global Incubator and Acceleration Group. We work with the different BUs of the group, and we're very much focused on what we call inside-out growth, creating internal startups, and working very closely with our corporate venture arm. We're actually in the process of changing our name from Social Innovation Business to the Environmental Business Division, as starting this fiscal year, we'll be focusing exclusively on climate tech and environmental-related, what we call ventures. So I'm here to talk about life after COP26. COP26 last year, some of you may know Hitachi was one of the principal partners at COP26. It was a great event, spent a lot of time discussing government representatives, private sector representatives, quite a great event. It was Sir David Attenborough made an opening speech basically telling us that we can do it, right? We're the greatest problem solvers on Earth, and we can make it if we apply all of our time and focus on how we execute on it. A lot of promises, a lot of commitments at the conference from governments. I don't know if some of you have followed all the different bills and packages that the Biden administration was able to vote in 2021 and earlier this year. Some challenges along the way, but the amounts are massive over the next 10 years. And you look at the numbers, you look at the details of these bills, quite a significant part of it is related to the climate change transition and enabling this. Other countries in the G20 made significant commitments, Canada, Germany. We also heard about some of the other countries with economies and were really reliant upon, fossil fuels where, there were some discussions, some hesitations in terms of the commitments. But across the board, reinforcing the commitments. Companies, the private sector, all sectors, transportation, the finance, what we call the FSI sector, oil and gas, et cetera. Everybody's doubled down on the investment and kind of working on how to make it happen. Hitachi, we have this, we did the same. We have this vision of a low-carbon society, resource efficient, and harmonized with nature. I don't know if some of you have seen some of the values of Hitachi. We've had these values for the last probably more than 10 years. Everything we do has to be justified from a perspective of economic value, social value, and environmental value. So every time we come with a new project, a new investment, we have to kind of link it to these values. At Hitachi, obviously, we increase our levels of investments, but also introduce incentives for executives, right? Incentives executive pay linked to an environmental performance from April, so since last fiscal, that would put in place. So at the conference here, you see Alok Sharma, the COP26 chief, working on the final document of the COP26, and you can see discussing and with a number of questions, right? The final release of the document, I think if you remember, was postponed and postponed and postponed, illustrating, the number of questions, concerns, and, what we put in the document. Are we, sure that we're going to be able to make this happen? And I won't go through the details of this slide, but lots of commitments, lot of comments here and there. At the bottom left side of the slide, you can see that the motor giants or the major automotive OEMs refused to sign a deal to end car emission by 2040. I'll go back to that later in the presentation. So clear objectives and questions around execution. There's also this concept of we need to do this faster, right? So we in the markets, we let the market forces play their role with their timelines. And then there's this message coming back over and over we need to make this happen faster. So you talk to government representatives, you talk to business or professors, et cetera, they always tell you we need to let the market forces play their role within their timelines. And then there's seems to be like this alarm, red light saying faster, faster. So how do we do this, right? We all know how to build businesses, execute, kind of drive adoption over time, and then eventually create these new businesses. So execution and faster. So that's where we come in. We as CVCs, but also the corporations and private players, private sector players that we represent. So we've done our job, and investments by VCs in climate tech. As you all know, I'm not going to spend too much time on numbers. We saw some numbers yesterday, and I'm sure you've been looking at many reports on the numbers. And, investment in climate tech has been increasing significantly since 2013. Last year, climate tech startup raised $40 billion alone in last year alone. And then overall, the deal size is increasing, right? And you can see on this chart how the investments are significantly increasing, and just over the last 24 months. So average deal size is increasing, pointing to the fact from one of our colleagues mentioned yesterday that more money is needed for the implementation. You have much more heavy lifting required from the startups to make things happen, deploying technologies, impacting the infrastructure. So this is all, good, a good sign. And CVCs are responsible for 50% of those investments. So it's not bad at all. It's actually a pretty, it's illustrating the fact that we're doing our job. We could potentially do more, but we're doing, we're playing a significant part in these investment in climate tech and in overall in the transition. But there's a gap. There's a gap. And again, going back to that picture of Alok Sharma and then the other players, the questions, et cetera, there's a gap. And then this report from the UN that came out last year, the UN Adaptation Gap Report, stating that we need a significant step change in funding ambition. The report and other reports point to what I call a number of barriers to adoption, a number of barriers overall. In one of the in-panel discussion, we talked about how do we stimulate better the market. There's a number of issues in terms of people being able to understand how they can use the technologies. There's issues around the business models, right? The economies of scale that are needed. And also the report points to infrastructure and building more resilient infrastructures that will help us deal with the impact and the effect of climate change, right? Here we have a picture of Carlos Tavares. He's the president and CEO of Stellantis. Stellantis is a result of the merger of the French automaker Peugeot Citroën and Fiat Chrysler. And Mr. Tavares has been making a number of statements over the years, confirming the investment and commitment of the company in EV electric vehicles, but also on a very regular basis has warned all key stakeholders in the markets of the challenges associated with moving to EV and migrating to EV. Expensive, the cars are more expensive and they're heavier, and also, less engineers needed, right? Less engineers needed. In Germany, it's estimated that with a green transition, by 2030, there will be about 240,000 engineers whose jobs will be at risk. So that's also a challenge, right? So obviously, that's where you have to, there's other players. It's not necessarily our job systematically to focus on the social challenges. But this is illustrating the fact that for execution, there's a number of dimensions. If we want to move faster, if we want to invest and get greater return faster, or greater returns, but you want to do it faster as they're asking us to do, there's a number of challenges, a number of areas to look at. So let's look a little bit at how some of the UN and other institutions are looking at investments. In 2020 and 2021, there was a report looking at how our investment are structured and climate tech are structured. So you have mitigation. Mitigation is basically, mitigation is actually climate tech and reduction of fossil fuels usage. And mitigation represented, in the period 2021, 97% of all investments. So this is about between $550 and $600 billion. And it's most of these investment, over 85%, by the private sector. And then adaptation, as it's been called, is everything related to building more resilient infrastructures, business continuity, et cetera. And adaptation represent only 1% of all the investment being made, right? And it's mostly by governments. So many of you work with or partner with companies that provide infrastructure services, services that support government, and services and put you in a very good position to understand how to create these new adaptation type of services. The private sector has seen, has had some difficulties in terms of the bankability of these projects so far, at least that the report was stating last year. But there's a gap, and there's an opportunity also there in terms of the investments and what to focus on, kind of look at what we can do. Hitachi, we provide quite a number of infrastructure services to different governments, from train to nuclear power plant related services. So that's an area for us to look at. Don't get me wrong, the opportunity is still there, and very, very, very important, right? $12 trillion across the different sectors by 2030. And how do we make it happen? How do we make sure that we get the adoption? How do we make sure that we start seeing the returns from these investments? So all this to come to the fact that, yes? 5 minutes. Okay, so I'll speed up. So we have our traditional actors, the VCs, the startups, the corporation, the CVCs, and we also have the governments. The government was, first thing, they are customers. Governments have employees, which are end customers, consumers, but they also represent each government, thousands of small, medium, large companies. And governments, in partnership with them, can also help us accelerate the adoption. And I don't want to spend too much time. You understood in the previous, a couple of minutes ago, I was describing in terms of the opportunities, both from a mitigation adaptation standpoint. And that's where we can further focus our investments and looking for returns. And as a final note, I believe that CVCs play a critical role in terms of implementing, in terms of triggering this implementation and this execution. Obviously, because we trigger the investment, we provide the investment, but also because we are tied and linked to our mother companies, what we call the corporation, and the corporation that is already involved in infrastructure services, implementing and providing services to and products to the different segments of the market. So we play a significant role by funneling the investment and being able to point to how, through our corporations, we can execute on the, I would say, execute on the execution, right? So again, we leverage our talents, our ideas, like startups, VCs, we invest. We are large players as corporations interacting with government. CVCs can push and can look at where their pools of opportunities and returns are untapped, and when we can actually focus this investment further on the execution side. I think that's it. I did in less than 5, I guess.